you trust your crypto ass? Do you trust your crypto?
Oh, that's weird. So weird.
Do you trust your crypto assets to centralized exchanges that actively sell your private information and front run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
Yeah, weird. Weird how Brandon has all that time to take vacations. Huh. Weird. Maybe we're going to have to increase his job responsibilities. It's clearly he's got a lot of free time on his hands. Ain't that something? Hello, 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 hello. Let's see. See how many people tune in today, the day after the biggest piece of Bitcoin news in the last 10 years, I'd say. So when you were listening to all those douchebags out there telling you what was going to happen, well, we've analyzed the board of the SEC and all of that. Shut up. None of these people know anything. None of them, including dumbass Pompliano. Well, this is going to really throw a curve. And yeah, because I'm sure everybody at all these financial firms, they're like, well, there was a weird tweet, so that's it. It's over with. We gave it a good run. Go ahead and shelf that for the next 2 years because of a weird Pomp. Shut up. You're a jackass. Matrix Sport, those idiots, Jihan Wu and all those dumbasses. Well, because Democrats and the signaling for the election. Shut the fuck up. These people are so stupid. It's mind-boggling. And you know what? They'll go crawl under a fucking rock and they'll be quiet. And then 6 months later, they'll pop back up like all these Johnny-come-latelys. You haven't heard a word out of Anthony Pompliano's dumbass in like 2 years. But now that the ETF, by the way, yesterday, he was the one saying it wasn't going to happen. So he hasn't shown his face in 2 years, and he comes back up as an orange-pilled, laser-eyed Bitcoiner, and he's telling everyone, no, not this time. Not yet. Not yet, people. Let's tone down the enthusiasm. Shut up. These people are so stupid. And it's, listen. When people make absolutist statements, you just start being careful, especially when they tell you what's going to happen and what's not going to happen. No one knows anything. It's all just kind of these probability distributions over a bunch of gambling degenerate assholes, mostly. So just keep that in mind. This whole thing is a beauty pageant. Anyway, that's it. It's not really anything to be mad about, so I had to get some kind of rant in, and I figured I'd rant on the dummies. Let's see. Let me say hello. Make sure we got all of our hellos out of the way. Jeez, I'm not going anywhere where it's cold, man. I wake up here in LA, it's like 47 degrees, and that still feels a little chilly when it's windy, but it'll be 60s in the evening or in the afternoon. And then you can go on the roof and get sun. I still do that. All right. Yeah, I knocked this one out in Dolly 3. I was like, I want a children's book version of Bitcoin, jumping over the moon or whatever. And so it kind of looks like Bitcoin's wearing like a cheese costume because like the legs are sticking out of the moon. Like Bitcoin has become part of the moon. I do think there is some kind of moon-based argument. It touched just for a second this morning. While I was having coffee, it touched like almost 49K, and then it popped back down. I don't think you're going to see the big moves today. I mean, today is like day one. Not even all of these ETFs are spinning up today. But I think we kind of hinted about it yesterday. We talked about just like a small microeconomics look at the amount of Bitcoin that's floating around, available on exchanges, and what would $100 billion do to that over the course. I'm gonna make a very loose, sloppy ass assumption that 100 billion is going to come into the space directed at Bitcoin, directed towards these ETFs over the next month. Let's say 1 month, and you kind of should probably say 1 month from tomorrow because today is not really. It's kind of a quasi-official launch, but not all of these ETFs have launched. And tomorrow's Friday, so we're you're thinking, okay, well, really by next week, a lot of these firms are going to probably talk about getting the marketing machines running and all this kind of stuff. So, I'm gonna go through. I did a little back and forth with GPT-4 and my friend Claude Dew. And I always think you should run those next to each other. But anyway, and so we will do a game theoretical journey. And what would it take? And my loose assumption is that I think 66,000 is possible. Now, this is more a game theory discussion than a price discussion because it really is not that important. I mean, if you convert it to pennies, if Bitcoin was 47 cents and it went to 66 cents over a month, that's not all that exciting, right? That's not that much. I mean, you saw some tokens yesterday go up 20, 23, 25%. Cardano was touching 60 cents again. It was up 20 at one point, like 23, 24%. Well, that's certainly much better than Bitcoin's done during this last couple of weeks, but still pretty cool. So you're seeing a lot of these other assets move and appreciate. There's just like a general kind of optimistic whimsy in the market. But this will settle down and then we will get back to normal-ish. But this is going to be a new normal, not the old normal. And I think that this new normal is going to be a lot more, it's going to look a lot more like price accretive, like number go up for the most part. You're also going to bring in the gamblers and the Johnny come latelys, and everybody's going to have a system to sell you. You're going to start seeing all this bull crap pop up on YouTube. Like, did you know that the biggest thing that's ever happened to Bitcoin just happened? Here's how you can take advantage. You're going to see some little dumbass punk who doesn't own $14 worth of Ross, sweaters telling you how to manage your money. Don't click on these things. None of them. Not even the medical ones. There's one with like a guy holding a spoon to his eye. And it's like, did you know there's an eye treatment that can make your eyes go perfect and you can forget about your glasses? And he's like thumping on a spoon over his eye. That's all, that's all a bunch of bullshit, right? Thumping a spoon over your eye socket doesn't do shit, but make you look like a fool. So don't do that. And then extend that, don't do that to any of these get rich quick, schemy, douchebaggy, these options guys. Are you buying options? Well, let me shut up, dick. None of these dudes have a pot to piss in. You can tell Look at the production quality of their shitty videos. You're telling me you make $1 million a week trading options, but you're here peddling your shit and your commercials filmed on a half-ass broken iPhone in your garage? Kick rocks, dick. Like, these dudes are so, there's, I don't know who clicks on this shit. Anyway, whatever. All right. So yeah, the SEC thing is behind us now, which is at least good for a little while till they go and start indicting more people. Are we officially in the green? Not yet. So the 27 days left, that's based on cycles, the past cycles since the beginning of Bitcoin all the way until now, those past cycles. And we started doing that, and Philip is the official day keeper. And we started doing that over 470 days ago. So we wanted to see how close we would get. Of course, is our number accurate? It's accidentally accurate. Is there any way to determine from 3 past bull markets when the next one will be? No. But we did get within probably, I mean, some people would argue we're in a bull market. I think that there's probably an argument to be made for that. But to me, we're not in a bull market until the current market exceeds 3 trillion. And we're at just shy of 1.8 trillion. I was looking just a little while ago. Let's see. 1.788. It was a little higher, but so we're just shy of 1.8 trillion. So we still have another 1.2 trillion to go. So we're not quite in a bull market yet, in my opinion. I think we have to take out the old bull market high to be in a new bull market. You could say it's a bullish environment and all this. A lot of that is kind of, open to different people's interpretation. So we'll see how close we get. My guess is in the next 27 days, I think there's a good chance that we take out those highs. So we'll see. And then we'll be in green. But anyway, it'd be interesting to see how close we are with this prediction. But it was pretty far off. It was quite a while ago. All right. 2 friends already reaching out. Yeah. I have the, there's the 4-friend rule in a bear market. It's like when the 4th person calls you in a panic, you're probably at the bottom. I don't really have one of those things at the top, except that when I see rational people taking on leverage, when people say, oh, and when you hear a lot of people saying this time's different. Yeah. Well, so, okay. Are we in green markets? I don't think we're in green markets. We're in green-ish markets, but it's not a bull market, in my opinion. Okay. Crypto Gamer asks, Grayscale just overtook BlackRock in volume for their spot ETF. I wonder if people are dumping their GBTC with the high. Well, I don't know. I think that a lot of people bought. So keep in mind that with Grayscale, it was a trust, and that a lot of people bought the trust with a huge discount to NAV, to native asset value. So if you took Grayscale and melted it all down into Bitcoin, right? Like converted it into the Bitcoin it represents that they own, and then equate that to the shares. When you were buying, back in 2017 and all that, there was a huge premium. You were paying an extra 30% premium to get into GBTC, because for a lot of people, that's the only way they could get exposure. Then it went the other way. It went back up in 2021, then it went down 2022, So it got nuked in 2022 mostly, and most of 2023. Now we're in 2024. So what was a premium went to a discount, went to a premium, discounted again. Most of last year was at a huge discount. Sometimes I think as high as like over 25% discount. A lot of those people that were bullish on Bitcoin bought with that huge discount. So a lot of those people are like, look, man, I just got 25% for free just because the discount got closed. So in effect, and depending on how long they've owned it, if they've owned it for over a year and it closed that discount gap of 25%, even if you're going to take a 15% hit, it's still a pretty good for the kind of people that are probably playing that game with GBTC, might make sense to get out of GBTC and get into a lower fee environment. If, I mean, is 1.5% that much? Not really, but maybe it is when you look across the board and everybody else has teaser rates of 0. I had a rate scale, but I'm not going to go into all that because I don't want to make, this is more about the game theory side of things. This is not so much about price, but sometimes they merge. So anyway, yeah, this could be that. But remember, not all of those ETFs are trading this moment. So it's going to take a few days for all that stuff to get going. But yeah, you got the 4 calls. So I don't know how it works with when the markets are going up. I just know that when the markets are going down, if you get that 4th call from somebody panicking. And I also think about like my friends that have a lot of money. If any of my rich friends call me and panic, they definitely, like, that's one of the 4 calls. And I definitely got 4 calls when we were in the throes of like the bearish times of 2022 and early 2023. So yeah. Yeah, on the bullish side, I don't know. You're going to get a lot of people asking advice. I just tell people, go learn. I'm not giving anyone, I'm not going to tell, especially family members, man, do not tell anybody in your family what to do at all. Don't hint, don't nothing. Oh, what should I? Nothing. You should nothing. Well, do you think it's time to go? No, you think it's time now? You think it's time now? Like, these people have been looking at you like you collect like porcelain sculptures and wear a foil hat like you're some kind of paranoid asshole for years. But now they're like, okay, so what's the plan? There's no plan, Grandma. Go watch Fox and Friends. That's your plan. Anyway, I don't give anybody like outside of this kind of core, I don't give anybody advice on anything. They're like, what should I do? I'm like, I don't know. What should you do? You do you, bro. We'll see. This time machine takes me. You don't have to trade options, but you can sell options. Being a net seller is great if there's a place that has liquidity enough to sell. This is one thing that I hope that this ecosystem will achieve, especially with these new ETFs and all this money coming in and the forcibly purchasing up Bitcoin off exchanges and stuff like that. One way or another, I hope that there are big, vibrant, liquid options chains that you can sell covered calls against the Bitcoin that you might own. Or if you're trying to get into Bitcoin, you could sell cash secured puts against your cash to try to enter the position. Ledger X was great, and then it was nothing. Maybe it'll be great again. But right now there's just not enough liquidity. You can't get you can't get one Bitcoin order filled. Like, imagine going on there with like 50, 60 Bitcoin, 100 Bitcoin, and like, yeah, I want to sell calls. They're like, oh, okay, but well, we don't have that. You can't. I don't even think you can get that filled at Deribit. That scammy bullshit operation in Europe that steals money from people by rigging the numbers at night so that Bitcoin will go up and down by a few $1,000 just to whack out anybody that had any kind of leverage and just steal your shit. That Deribit. Yeah. Those guys are so sketchy. I called him out on it and they're like, well, and I said, I don't know. I'm going to get lawyers involved. And they're like, what lawyers? What can you possibly do? Like, their argument wasn't, we didn't do it. Their argument was, well, what kind of lawyers? Isn't that funny? You're like, I'm accusing you of murder. And they're like, who are you going to call? Like, no, your first response is, I didn't murder anyone. Anyway. Yeah, everybody's asking about buying Bitcoin. I just kind of shrugged. Someone asked me this morning, hey, is it time? I'm like, I think it was already time. But now every grandma and grandpa and everybody else that has a 401k and everything else is probably going to get 2 to 3% exposure in digital gold. Wait till the commercials start laying down. That's when it's going to get good. Do you think there will be any do you think BlackRock's going to have a Super Bowl commercial? I know that some other companies have some pretty badass commercials, some pretty cool ones, and now they're going to just start pelting us with them. But do you think that's going to be a Super Bowl commercial for Bitcoin? Be interesting. Okay, after the split, our nodes will be half filled. Are they just as good as full node? Okay, Raphael, in the future, yes, use your words, buddy. because there's nodes in all these different networks. I know that you're talking about hypercycle, but maybe I wouldn't out of context. Yes. When in the hypercycle ecosystem, when your node licenses achieve a rating of 2, you can, I won't say split. Let's call it doubling. You will double your nodes, meaning you will take one node and you will break it into 2 nodes. You will now have double the amount of nodes, but the same amount of tokens will then be put in each. So you had 1,024. Now you have one node with 1,024. Now you have 2 nodes with 512. And then when they break down, you would have 4 nodes with 256. And then when they break down, so on and so forth. 128, 64, 32, 16, 8, 4, 2, 1. At the end of 10 splits, you would have, if you had one node, I know splits, I keep saying it too. At the end of 10, they keep changing the nomenclature. It's not me. At the end of 10 of these cut in half doubling of X, whatever you want to call it, splits, you would have 10 nodes. Sorry. At the end of 10 splits, you would have 1,024 nodes with 1 token each. That's as small as it can go. In the hypercycle ecosystem, the Ethereum token is not the actual native token. The Ethereum token is a placeholder. The C hypercycle, C as in Charlie, hypercycle, is the native token. And that token wraps data and other items, and that's the transaction vessel. So you can't have less than 1. And they are all just as good as any other license, because it's still that node running on some hardware, processing compute transactions in the AI space, AI compute. Think of it like between 2 AI machines. This is the compute layer. This is the infrastructure for compute. Are there others? Yes. Are they as good? Not in my opinion. So there's plenty of space within this ecosystem. There's plenty of space for hypercycle to be extremely successful, and there be 5 other companies or 10 other companies doing it, because there's so much demand for AI compute. And by the way, anybody that has a company or is part of a company or knows anyone at a company that's doing $100,000 a month or more in AI compute or AI querying, just compute in general, they can work with hypercycle, and hypercycle will actually like give manpower to helping them develop the process to use hypercycle for their company. Like they'll walk them through it, like a little hand holding thing. So anybody that knows anything like that, you're welcome to email me, and then I will connect you to whoever you need to be connected to. How about that? How cool is that? Anyway, I don't know if we'll be at all-time highs in 27 days. Remember, this is a very loose, sloppy ass prediction that we made based on cycles 470 something days ago. All right. Okay, that's a bold prediction. Yeah, squiggly line stuff doesn't work, buddy. You know that. GT, I'm guessing Sam, did you mean GBTC? Was it down to 50%? Yeah, yes. So if GBTC was at 50% discount, then a lot of people are sitting on a lot of profit. It might make sense to roll that over. And yeah, a lot of them have teaser rates too, because if you look, they put out a sheet yesterday that had all of the rates, and most of the ETF issuers have a teaser rate for 6 months to 12 months that basically puts it at 0. So they really want to get people going. Oh, yeah. Yeah, the top indicator. Yeah, well, Barno, hopefully you're not talking to too many strippers. Hopefully it's waitresses. And when the Uber drivers are giving you, I guess when they're giving you investment advice, that's bad. When they're giving you investment and tax advice, that's real bad. And if it's a Lyft driver, which is like a swap meet Uber, definitely just run. I knew things were bad. I remember I was walking across the street to my buddy's place, and I saw this beat up like Subaru thing and the guy was talking about Dogecoin, and it was just and just so, I mean, like beyond arrogant, just like this guy knew. He just knew, and he was talking on the phone with someone. He was like waiting for a ride to do a gig, because I think it was an Uber car, and he was like, "Yeah, I was gonna sell at 70 cents. I think I'm gonna go ahead and hold on to $1, and then I'll probably take a little bit off the table." And I'm like, "Oh God, these idiots!" I'm like, get out of all this stuff, get out of all of it. And that was a few days before Elon Musk was going to have his Saturday Night Live performance, where he shit all over Dogecoin, by the way. And that was the top. I know a lot of people that idiots that borrowed money to buy Dogecoin. And their thesis was because Elon. Come on, man. You deserve to lose everything you've ever had and everything you will have, and work as a street cleaner for the rest of your life, or something like that. Okay, I'll see if I'll attack any other questions that we have. I think the hypercycle split, like the division of cells. Yeah, that's a good way to look at it. Meiosis, mitosis. I guess it would be, which is the one? Is it mitosis is the one where half the genetic information gets split rather than a doubling of genetic information? Because you could think of the genetic information as the tokens. So I think maybe it's meiosis. Oh, so you got to memorize the science stuff. No, you don't, because you can just use GPT-4 and none of it matters, because the whole world is literally on your phone now. Let's see. They banned crypto commercials from sports events. Well, I don't think so. I don't think they banned any. Listen, do you guys remember those commercials for Insight, the other male enhancement? You know, that was all a scam, right? They had like actors and stuff on that Insight, and the guy was always smiling. Look at Bob's smiling, something like that. He had like a creepy ass smile and he was like waving to the neighbors and stuff. You're like, what's going on? Like, is Bob hooking up with all the neighbors' wives and stuff? I don't know. But anyway, that whole thing was a scam. Just like a giant scam. Yeah, there's been a lot of those. So, and they certainly haven't stopped pharmaceutical commercials. So my guess is probably not. I think the rule is, if you put a bunch of money for, however many millions of dollars it is per 30 seconds, you get to show your shit. Let's see. Well, they don't from what I've heard, originally, the way it was explained to me, the nodes would automatically go into a doubling effect. Like if you hit a rating of 2, they would double. Now what I'm hearing is they are gearing it more towards letting people choose. Why? Well, you might not have equipment. You might be running at the very edges of like the dexterity of the speed limit of your hardware. And you might not want, for whatever reason, you might not want to double it. So you would keep that rating. Your rating would continue to increase. So there's no forced, whatever term we're going to use, meiosis or mitosis. There's no forced split. But you click a button and then the split occurs. I don't know why you wouldn't. Yeah. So there you go. Okay. Let's see. Hypercycle is first. Yeah, I think Hypercycle is going to do really good. Remember, we have now less than we're below 90 days. 80 days or less until compute rolls out. I mean, again, if there's no glitches or hiccups. And I saw yesterday the 1155 DApp, the DApp for the Hypershare token. The Hypershare token's done. I saw the DApp. It's cool. It's very clean. I'm not going to say it's easy, because some people have a hard time using MetaMask. So crypto's not easy. But if you've been in the Hypercycle ecosystem for a while, I think you'll be okay with it, using it. But essentially what you'll do is you will take your node bundle. You will break them into individuals if you choose to, or you can have the bundle. You will marry it to the appropriate amount of tokens, which is 1,024 per node license. I still think people are sleeping on this, and they're not grabbing the token, and they're going to wish that they did, because There's going to be, the minute that hypershare token releases, like officially, and people are marrying their tokens to their nodes, there's not enough tokens, not even close. There's like there's 2/3 enough tokens. So there's going to be a run on the token. There's going to be people singing the fucking blues right here in the chat. Like, oh man, don't oh man me. I don't want to hear your old sad shit. No, you've had months and months to get enough tokens for your licenses. What happens once they roll out that hypershare token is on you. But at that point, when you do the marriage, you will be issued your Ethereum hypercycle tokens will be locked, and you will have C hypercycle, which is the native token that will have a unique a token ID, like an ID. On the dApp, you put in your license ID and you put in your C hypercycle unique ID, and then you can point them towards hardware. So you put them here, and then you have a little button, click, and then you point it. It's not super difficult. So there you go. Let's see, hypercycle. Remember, after each split, they will all calculate or accumulate. Yeah. Yeah, because every node license is its independent little data center. Now, there will be an aggregate, right? There'll be an average. By the way, you'll be able to track all of that. Where? Node Market. At Node Market, you'll have a dashboard you can track. You'll be able to track your nodes, track your licenses, buy and sell nodes and licenses, like you can buy and sell tokens right now. So that's kind of fun. Yay. Okay. I think we've nailed all the questions. So maybe we switch gears now and we talk about this path. Oh, wait, we have one more question. What happens to the revenue stream after 10 doubles? Yes, it's no longer divisible. And maybe divisions is a good word, Mr. B. Maybe divisions makes more sense. Instead of applying it to like natural science. After 10, you now have 1,024 nodes per node, and they're all earning what they're earning. And my guess is that would be dramatic. I think we did the math that even at 10 cents, and you guys can check me on this, but even at 10 cents per node license per day, you're still earning like for one node license after 10 splits, you're still earning like $36,000 or $37,000 a year. So if you had 10, that'd be 370K. If you had 100, that'd be 3.7 million. And that's at 10 cents. Now that's not going to, I'm not saying 10 cents is the average. Could it be more? Yes. It could be $1 a day. Could it be less? Yeah, it could be 2 cents. We don't know. And also that's going to fluctuate as the network fluctuates, as the network absorbs new clients, things like that. It's not going to be like on day one, there's 150 clients all pouring, gushing fiat currency into the system. It's going to ramp up, right? And so it ramps up by every one of those companies that needs 100,000 or more in compute. Yeah, there you go. Nice one. That's after 10 divisions. That's one node license after 10 divisions per year at 10 cents a day. It's pretty good. It's pretty good. And they're working on, Neil, to answer your question, they're working on a lot of data center stuff right now, spinning up a big data center. I can't say anything more on that, but as far as I understand, HyperPG is going to be able to take on a lot of compute. Something that's going to be, I think they will be fine. The question would then be like, how many clients can you onboard? Because then in the same way that it took, 8-9 months to onboard a lot of users to the data side of it, like the actual compute side where we spin up nodes and all this kind of stuff, it's going to take a while for the biz dev team to get out there and reach clients. And because AI is so new, a lot of companies are using this and they don't realize the kind of the cost benefits of shopping around yet. But any sufficiently sized company is going to look for cost benefits all the time because their number one goal is to maximize shareholder value, especially if they're public facing. So there you go. Okay. Whew. Math question. If the new ETFs have to have actual Bitcoin to back their investors, and there's only limit. Well, Mary, that's what we're going to talk about today, isn't it? So yes, I think it is time for us to go behind the wall. We should, and we shall. All right. Let us now go behind the wall, and we will return with much aplomb. Because, wait a minute though. I don't know if I'm going to go behind the wall with this one. Let me recant. Hush you. I don't want that one. Since we're not going to get into predictions, technically we don't have to go to behind the wall. It's more of an education, more of a game theoretical discussion. How about that? Let's see. So give me a second. Let's switch gears. Let me make sure I haven't missed any other questions. This is a good question though. So let's attack this. Let's attack this as we talk about the Bitcoin spot ETF price implications in our more classroom setting. How about?
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. So we want to understand the effects of the spot Bitcoin ETF. And real quick, they're like, many of you would say, there's been ETFs. This is no difference. This is difference. The difference, real quick, in a spot Bitcoin ETF means that these ETF fund managers have to own Bitcoin in order to issue shares against that Bitcoin. It's not just an index or a proxy. The funds have to own Bitcoin. Do they own all the Bitcoin that they're going to be? No, they do not. Not even close. So they've been buying million here, 3 million, 5 million, 10 million. I'm going to speculate. So let me give you my weak assumptions. I'm trying to figure out in my mind what the price of Bitcoin would look like in the next month, given a couple of assumptions. There's no concreteness in this, but these are my assumptions. Total Bitcoin available through exchanges is, I estimate about 1.5 million. I'm sure that some people will say 2 and some people will say less than 1. I think it's about 1.5 million. I think that's a safe estimate. These companies, these 11 that got pushed through, there'll be more, but these 11 that got pushed through are going to have to seed as money comes in. They're going to have to seed by purchasing Bitcoin, most of it through OTC, but it's still Bitcoin's Bitcoin. You got to buy it from somewhere. So will all of it hit the free float? No, but indirectly it will, because if you're buying it OTC from other people exiting out, those are people that wouldn't be selling on exchanges. So the downward pressure would be mitigated by the upward pressure that would be happening behind the scenes, right? So I think those things cancel out. So you have about 1.5 million Bitcoin available to trade through exchanges. This is my assumption. The ETFs are going to bring in my opinion, about 100 billion over the next month. It's not going to be all up front, but I bet we see 10 to 15 billion of it over the next 7 days. So this time next week. But we're not talking about what's the price going to be this time next week. We're going to say, based on this, what would this launch of these funds and they're gobbling up a Bitcoin, which we know there's just not that much of, $100 billion worth of investment over a month, what would that kind of do to the price? And I know there's a lot of moving parts here, and there's a lot of things that you can't quite assume. There's even a whole macro landscape that has very little to do with Bitcoin that you still have to kind of apply against it. But we're going to try to cancel out as much noise as possible. So the introduction of this new spot ETF, and for those of you who don't know, an ETF stands for Exchange Traded Fund. In my opinion, it will significantly increase the price of Bitcoin, especially considering limited availability of Bitcoin on exchanges. And the fact that it's not like one exchange. You're going to have to go shop a bunch of places. You're going to have to go shop Coinbase, shop Binance, shop Kraken, shop private facilities that may do some OTC trading. You notice OTC, you're going to hear a lot. Why? Because OTC is the way. Anyway, In game theory terms, this situation can be analyzed through the lens of demand dynamics and the strategic interactions among the market participants, right? SIPG. Strategic interdependencies or interactions, interwovenness among players in the game. So we have a couple of things we want to talk about on the cerebral side. One, supply constraints, which is a fixed supply game. Demand increase, which is demand pool, an iterative demand, not pool like swimming pool, pool as in to pull something. It creates demand pool inflation. We have the strategic behavior of the investors in this kind of Nash equilibrium among rational investors. We'll talk about market sentiment, which is a coordinated game. Think about like two gas stations on adjacent corners, kind of price matching for the most part, because they want to reach kind of an equilibrium. And then they also want a coordinated game, which is the best situation for both of them. And then you think, well, the sequential game of regulatory response. So if you start with the supply constraint, the constraint of the tokens, Bitcoin has a cap supply of 21 million. Okay. We know that about 5 to 6 million gone. See you later. Bye. Do not exist anymore. They've been burnt, sent to wallets that are irretrievable or just plain lost. Take that out of your mind. What's left on exchanges is really all we care about. What is the available supply if we know that, if we assume that there's going to be an influx of 100 billion? So this scarcity is akin to a fixed supply game. And for those of you game theory students, you can go look up a fixed supply game. And that's where the quantity cannot be altered, right? Hence fixed supply. So if you have an influx of 100 billion into a market with a constrained or fixed supply, it can lead to substantial price increases. This is a small e economics pull. This is like it's like an obvious one, right? If demand is the same, just the same as it is right now, and supply goes away, then it creates a pull in the upward direction. It's accretive. If supply is the same, like fixed supply, and demand increases by, say, 100 billion, it creates an accretive effect, right? It's additional dollar bids for a progressively smaller available quantity. And that's what leads us into a demand increase, the demand pull inflation. So the launch of a spot Bitcoin ETF makes Bitcoin obviously more accessible to a broader range of investors and grandmas and grandpas and people in 401ks and all this kind of, and like pensions and retirements, money markets, all these institutional facilities that have nothing to do with the ETF that will be giving exposure to their clients. So that's another thing. People aren't even thinking about all the pension funds out there that can't hold any crypto, period, full stop. And GBTC was like the closest thing, and that was kind of wonky. So it seems like at the minimum, you have a pretty good potential demand increase. So in game theory, this is similar to more players entering a game, each with their own strategies and valuations of Bitcoin, but each with the common goal of acquiring Bitcoin. And so the increased demand against that fixed supply will tend to drive prices upward. Now let's talk about the strategic behavior. Where does Nash equilibrium kind of fit in? So rational investors, like not crazy people, not Pompliano and Max Kaiser and all those wing nuts like Tone Vase, get rid of all those psychos. What's left are hopefully rational investors. They will anticipate the increased demand and limited supply. Now, this last couple of weeks, everybody's like, it's priced in. It's all priced in. Well, if it was priced in, then when Bitcoin dropped to 44 and change the other day after the announcement and the retraction, we would still be there. We're not there. We're up at 46 and change. Therefore, it was not priced in. So even the people that thought they knew what they thought they knew didn't know what they thought they knew, and which should tell you that no one knows. So you have to reduce the noise mostly coming from these talking head douchebags. You have to reduce the noise down to just something that you can create a base. This is the beauty of game theory is it gets rid of the emotion. It gets rid of as much noise as possible and just converts things to as close to math as possible. This is just trust in math, right? Like algorithmic integrity. That's why crypto works. You don't have to trust, mostly, you don't have to trust like Bitcoin. You don't have to trust the Bitcoin core developers. You can trust the network. You don't have to trust the person you're doing business with. Just trust the network. In lies the security of math. So this kind of rational investors anticipating an increased demand in a limited or fixed supply has led to some speculative buying, but not all of it, because now we have this new infusion of 100 billion is my estimate of cash coming in over the next 30 days. Sure, it could take longer, but for the sake of this discussion, 30 days. This behavior can further inflate prices as each participant, fund manager, hedgee, institutional investor, financial advisor, they're all trying to optimize their payoff, right? By buying before prices rise even higher. And you think, okay, well, why would they be buying if they before prices? Well, obviously, if you think you're at the top, you don't buy something, right? You don't knowingly buy the top. You would knowingly sell a top, but you don't know where the top is. No one does. And when you have most of the firms coming out with plus $100,000 2024 assumptions, then it generally moves the kind of the narrative among the corpus, like, oh, well, I get if everybody's saying 100K, then 100K sounds realistic, right? So they're kind of moving the goalpost, and a lot of people are buying into it. And if enough people buy into it, it's a beauty pageant. So that's right. That she wins. So this behavior itself can inflate prices. So everybody's trying to maximize their payoffs. Listen, it's not just the fund managers, the people that are like the traders, the financial accounts managers and all that. They make fees, they make commissions. They're going to try to maximize that. They're going to call every grandma, every grandpa, like, hey, Mr. Smith, it's time for you to get some digital gold, 2 to 3%, right next to your physical gold, which hasn't done shit in a decade. Anyway, so the market is likely to reach a Nash equilibrium where no player can benefit, no investor or investment facility can benefit by changing their strategy while the others keep their strategy unchanged. It would not make sense to go against the flow on this one as a fund manager. You would get your ass kicked, and you would probably do a disservice to your clients. So now we'll talk the coordinated game of market sentiment. This is a coordination game. And the reason we do this, for those of you that are not joining us all the time, everything that we do, the way we think is in terms of game theory as a fundamental for thinking, a system for thinking, and cognitive bias as those speed bumps or like emotional challenges that get in the way of rational decision making. But ideally, you want to be a game theoretical thinker. So in the coordination game of market sentiment, investor sentiment and reactions to the ETF can also influence Bitcoin's price. Now, we saw some of that today. We saw some of that yesterday. We've seen some of that over the last several months. Because remember, there's people talking about this happening back in like October. And of course, it didn't. But then we all started to kind of realize it made a lot of sense the 10th. I mean, we were all kind of thinking the 10th. And when I say this, I don't mean like as in looking backwards. Like for months, we've been saying the 10th because there was a mountain of pretty obvious evidence and intent that if, which the 10th yesterday was the last day that the SEC had punted all of these decisions. If they had punted again, they were going to get served with a fucking mountain of lawsuits. I mean, and Gary's gotten his ass kicked in court. I mean, kind of to an embarrassing degree. So at this point, it looked pretty clear that when, Grayscale, not as much, even though they had some kind of like jurisprudence on their side, but for sure BlackRock. When BlackRock calls, I guarantee you Gary's got the red phone, like that the president, he's got like the other phones, and then he's got the black phone. And I think every office of government has a black phone. And that's so that the guys over at BlackRock can call and say what they want to happen. So whether you believe that or not, I mean, it's pretty clear that on that one specifically, the fix is in. That's when I knew this was going to happen, is when it was like, oh, BlackRock wants in. Well, that's it. This is happening 100%. And here we are. So when the market perceives the ETF as a legitimate kind of a stamp of approval on Bitcoin, and I think we're not there yet, because even though this has happened, some people are still asking, what does that really mean? There's going to be a few weeks of, or even months of people grappling with like, what does this mean? And that's going to be explained to them by all of these facilities trying to sell this product. So you're going to get a positive feedback loop, which that in and of itself increases prices. And this scenario resembles the coordination game where outcomes depend on the players' expectations and decisions to coordinate amongst themselves. There's going to be healthy competition among the ETF issuers, but they don't want to beat each other up too bad. They don't want to make the product look bad. They want to make themselves look good. In a sense, it's not saying you're ugly. It's saying I'm pretty, right? It's going to be a lot of I'm prettying, a lot of gorgeous signaling or whatever. We'll see. Okay, and then the sequential game of regulatory response. So you're going to have regulatory bodies that could respond to this market shift in a variety of ways. I try to think, okay, what would be the next step in regulation as far as these things? Who knows whether that means people focusing on, the potential of Ethereum's not as easy. Ethereum's not as easy, but there's an ETF discussion to be had there, because they're similar in their kind of regulatory structure, but regulatory action is going to depend a bit on the market's reactions to this ETF. So, and this can create, I think it's going to create a little bit more regulatory stability. It's also going to be harder for scammy companies to come up. For instance, if the SEC goes after a scammy company, you look at the SEC now, you're like, well, they did pass the spot Bitcoin ETF. They're not all bad. So I think this is not good. If you're a douchebag, scammy dumpster fire company, it's not going to be as easy for you to float shit past and go, well, there's no rules. Also for those entities that think that they can jack the price of Bitcoin and not get caught. Because now you got grandma's money in Bitcoin through these ETFs. So these people that think that they're going to willfully, the Do Kwons, the scam bank run fraud chickens, the Alex Mashinskis, all these douchebags that think that they can get away with anything because they're rich. Dude, rich doesn't mean anything anymore. You be as rich as you want. If they want you, you're going down. You're going to jail, period. This isn't the days of OJ, right? The rich dudes don't walk anymore. They may not get 1,000 years, but they're getting some years. So I think that's going to be a rude awakening. And I think you're going to see a few people try to do some shenanigans and they're going to get fucking whacked. And it's going to be very interesting to watch. So anyway, before we kind of go in, I'm going to kind of break down now just specifics on how I kind of came to that like $67,000 price. But, and again, this is a very loose, sloppy ass guess, but, in summary of this kind of first section, the introduction of this spot Bitcoin ETF in the context of Bitcoin's limited supply picture, the 1.5 million or so tokens available on exchanges. I think there is the potential for a substantial investment influx. It's very likely to create upward pressure on Bitcoin prices, on the aggregate. So to the extent of this would depend on market sentiment, investor behavior, potential regulatory response to, whatever kind of manipulation might or might not occur. And all of these are components in a more complex strategic game involving a bunch of investors on one side, a bunch of salesmen on the other side, the funds, and everybody's different kind of objectives and expectations. So now let's dig a little bit deeper. Let's actually make some sloppy ass guesses. These are SAGs, sloppy ass guesses. There's really just one guess. So we'll say, okay, what is the current market condition? Current Bitcoin price, 46 and a half-ish. Okay. The available supply on exchanges, 1.5 million. These are my sloppy assumptions. The investment amount. If someone was to go into the market with 100 billion, which is what I assume is the overall net demand from these facilities over the next 31 days. What is the potential demand increase? This particular investment thesis represents a small e, microeconomics, increase in demand, a demand pull scenario based on what we talked about earlier. In a fixed supply game, like we talked about, Bitcoin with its cap supply and a substantial kind of anemic amount of Bitcoin, 1.5 million on exchanges, which themselves are anemic and relatively illiquid and spread across many exchanges. That's another thing. All of this is not one pool of 1.5 million Bitcoin. It's Bitcoin spread all over. It's not quite so easy. If you want to go snatch a bunch of Bitcoin, it's just not so easy. And so as you have this increase in demand relative to supply, it typically creates a pull scenario where a demand-based pull or price increase, accretive price action. So what is the price impact estimation? Well, if 100 billion is invested into purchasing Bitcoin from the available 1.5 million Bitcoin, the average price per Bitcoin to absorb this demand, assuming it was consistent. If all this was to happen in a short period of time, shit could go haywire. But if this is consistent, which by the way, this is a low estimate. If this is inconsistent purchasing, you could see it get real wobbly and real crazy. But considering a consistent, let's call it a smooth, straight line, the average price per Bitcoin in order to absorb this demand without other market dynamics, meaning if we have some giant collapse in the macro environment, all bets are off, right? And macro does matter. Anyway, forget the BLS jobs numbers and all that, and the BLS. All right. You're basically average price per Bitcoin is the total investment divided by the available supply. There is some margin for error in here because you don't know how easy. It's not just, there is a certain price effect to just going and getting Bitcoin. It's not simply taking currency units and replacing them for Bitcoin over and over because you're going to have uneven purchases. All of these ETFs are not buying exactly the same amount at exactly the same pace. They're all going to have different inflows. And I would be looking at BlackRock and saying, okay, what's BlackRock doing? That's going to give me an idea of probably what the market's going to be doing. We don't have data for that yet. But this simplified calculation gives us an assumption of about $66,000 to $67,000, assuming that all the available Bitcoin is bought, or that at least the available float is purchased through OTC or, one way or the other, that 1.5 million Bitcoin is transacted with about $100 billion worth of infusion at an average price. Again, no price effects, no market effects, none of that. The price would increase likely progressively as the available supply diminishes, leading to higher average costs at or around 66,000. And then you say, okay, well, what's the strategic investor behavior? Well, in a Nash equilibrium scenario, rational investors anticipate this demand pull or this surge, and they could start buying. So I think a lot of people will watch. And when these funds start really buying, they will buy. So you could have a second group of purchasers. Well, you will have a second group of purchasers that are trying to front run the funds. They're not even looking at the market. They don't give a shit about me and you. Retail investors don't matter. They're trying to front run the hedge funds, right? Just like high frequency trading, but not high frequency trading, right? So they're going to try, there's going to be some front running, some beauty pageant front running that has nothing to do with us as retail. And so when you see this kind of anticipatory demand surge right before the larger investment influx, this could drive the price up pretty dramatically too. And it's the pre-fund buying. And we haven't even gotten into the halving discussion. Yeah, that's a whole other thing. We haven't even gotten into that, which that's only 4 months away. Not even. What is the assumed date? April 24th, I think, right on or about. So that's going to be a big narrative, a big exciting narrative that these companies are obviously going to advertise. We're not even really talking about that yet. But I believe as that 100 billion is deployed and those funds and then private investors with big banks, big bankrolls front run those funds, you're going to have a lot of people that start backing away from selling, right? Like a lot of people might have sell orders out there, and right now they might be going, maybe that 50K order, maybe I'm going to pull that off the table. Maybe I'm going to park that out there at 55, 58,000, 60,000. Well, what if Standard Chartered is right? 120,000. Listen, at JP Morgan, where Jamie Dimon assholes crypto every chance he gets, his own analysts come out and say 100,000. Like, what the fuck is going on over at JP Morgan other than crime? Because no one's going into the banks. That's the other thing. That's a whole other thing. Anyway, I think you're going to see a bunch of investors that might have sell orders hanging out there, walking back their sell orders, like taking them off, instituting, instead of stop losses, trailing stops, maybe. Of course, you're going to see the leverage and all the idiots, and that's going to create some anomalies. But for the most part, it's a market sentiment and kind of an accretive market speculation environment. So I try to cancel out the things that like I can cancel out to reduce the noise. So mostly positive market sentiment and speculation is going to likely lead to a price overshoot where the actual price increase surpasses the theoretical price impact. So, on this path to say 66,000, could we see 75? Sure. Could we see it float around 55 and then back down to 48 and then up to 69? And yeah, you could see it all over the place. I also think there's probably some amount of weirdness right around 69,000, which is the previous all-time high. I think some people will just, because they sat on a loss for so long, there's some people that will sell at the all-time high because they just want out. And so there's probably a certain amount of tokens that go. So at 69 to 70, when we would go into price discovery, you're going to probably see a dip again, just people that like, I'm out, I'm done. Bitcoin didn't work for me. Bitcoin's not good. So you'll see that, but it's going to be overwhelmed and probably gobbled up pretty quickly. So I think you could look at I think there's very likely going to be a price overshoot. Conversely, if the market perceives this as a bubble or fears some kind of weird regulatory clampdown, well, I think on the regulation side, we're past that. I think this bubbly thing, a couple of people will talk about it, but this is not what a bubble looks like. I don't think you have a bubble if you're not even at your previous all-time highs. I don't know how you could have, could there be a mini bubble? That's not really a bubble. So anyway, I think it's going to be a very volatile, not straight line path. And long story short, this is a simplistic calculation, but it's a good way, even though it's a simplistic calculation and we get a price of around like 67,000, 66 and change per Bitcoin, investor behavior, sentiment, front running, can all lead to prices varying significantly from this. I think if they were to vary, they would vary towards the 69 level. But I think there's probably a little bit of pushback there. So I think markets are complex. I think people are relatively simple. I think prices are influenced by a bunch of mostly simple people doing mostly simple microeconomics calculations with a very thin or lacking understanding of game theory and mostly led by cognitive bias. These markets you're not competing against a market. You're competing against a bunch of mostly idiots. Now, it won't be like that forever because soon you're going to be competing with robots, but you're not competing with the robots right now. You're competing with dummies. WWDD. What would dummies do? So, and no, I'm not. No, it's not based on half the price of Bitcoin plus the current price. No, that's not. No, Joseph. No, I just told you. I took the available supply. I infused 100 billion. And I assume the available supply to be 1.5 million available on exchanges, a variety of exchanges. If 100 billion comes into ETFs, all of them, fueling up their ETFs to sell their shares to their clients. If you get 100 billion over 30 days, whatever it takes to reach 100 billion, however many days that takes, at that point, this should be the accretive price effect. Okay. Whew. I don't think the ETF for Ethereum is the next narrative. I think the halving. I think that's the narrative. I think Crypto Gamer nailed it. Yeah. And I think BTC, listen, this is definitely a gateway drug. This is 100% a gateway. Because now, well, look, I'm not going to go over it, but you just think about all the facilities that could never touch Bitcoin, not in any way, shape, or form. Just look at how much money is locked up in pension funds. Someone want to Google that? Just look up how much money in the world is sitting in pension funds. It's a dump truck. I was going to use a cuss word, but there's not a cuss word that has the proper gravitas. It is more than a dump truck. It is a fuck truck. Pension money is huge, and pensions are not making money right now. Listen, a pension has to nail, and this is derivative, and we'll call it a day, but pension funds have to nail like 7 to 7.5% just to manage the money exiting the backside of a pension fund through lump sum payments and like stipend payments, right? So if they're not making money, a pension fund has to make like 7% a year. So what do? When they can't make that, they go and take on stupid ass leverage. They take really stupid leverage and then they get blown up. Why? So that's why there's all these rules about pension funds can't directly own high yield, or what we call junk debt and junk assets, which is things rated below BBB. That gets into a whole other thing, but there's a lot of pension fund money, firefighters, bus drivers, and police officers, and all that those funds can now participate. A lot. You're getting, just quick numbers gives you probably 5 trillion just in the US, 20 trillion. I mean, it's a lot. It's trillions. So does that mean trillions are coming to Bitcoin? Of course not. But does it mean that some of it's coming? Absolutely. Yes, worldwide. Yes. So the money is coming. Why? It doesn't matter if Bitcoin's good or bad. This is something new that they can sell. Grandma what did she start with? Probably edibles. Grandma. So yeah, I think you're right, Gamer. I think there's going to be a lot of rotation into the BTC. All right. Let's call it a day. We'll see you tomorrow. Stay in school. Don't do drugs. Don't do anything. My poor insolvent drunk strung out on meth grandmother wouldn't do. Or Brandon, who's on an airplane. I think he's going to go see, he and his kids and his wife are going to go see Hamilton or something like that. That would be like pulling all matter of fact, I would willingly pull all my fingernails out, but I think he'll probably enjoy it. All right. And on that note, we bid you adieu.
If you're an accredited investor and you want in on angel, seed round or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first. Being first is so much easier. Schedule a digital private client interview today at nickblacknext.com.